Good afternoon, everyone, dear guests and all the related parties. Let me greet you on our panel session, AIFC as a turnaround place, carbon credits and opportunities for farmers, energy-intensive industries, investors and vendors. Basically, the idea of this session was to increase the awareness of accordingly new subsection of ESG agenda, such as carbon credits and carbon offsets. And today we try to unite on a panel different stakeholders, such as representatives of investors, representatives of consulting firms, investment projects, third-party opinion, and of course the overall AIFC representatives from investment deals and structuring department. And on the panel today we have Maurice Frosch, CEO at Kingston Organic, Alex Rao, partner at Environmental Commodity Partners, Christian Burning, partner at Climate Wage, followed by Irakli Partsvania, CEO of Varnik Ecoberry, and Viktor Kovalenko, associate partner from Ernst & Young. So let me start by briefing you several slides on overall industry, and then I'll pass the floor to my colleagues. Can we turn the presentation on? So basically, in this presentation, we try to increase the awareness of several factors, such as overall Kazakhstani carbon-2 emissions are twice higher than overall world, which is 3.2 versus 1.6. And that the carbon trade agreements allow the sale of credits to emit carbon dioxide between nations as a part of international agreement aimed at gradually reducing total emissions around the world. On this slide, we try to depict that overall CO2 carbon credits, which is per metric ton of CO2 equivalent in Kazakhstan, the overall pricing is around $1. Whether in European Union, we see that the price is around $50. And of course, the prices vary from country to country. And as per our humble opinion, the pricing of KZ CO2 emissions and credits depends highly on a low supply and demand. On the next slide, we clearly see that there is only 3 ways to achieve reduction of emissions. First, it's improving production processes. Second, the use of renewable energy sources. And the third one, sequestration and reforestation projects. In this scenario analysis done by McKinsey, we clearly see that usage of renewable energy sources combined with improving productivity and production processes won't lead to net zero. And we believe that the role of sequestration and reforestation would definitely help to achieve the net zero emissions by 2050. On this slide, we try to depict the life cycle of a carbon credit, whereas at the beginning, the project developer should and must own the large plot of the land, followed by classification and review and validate validation under the private standards, followed by credits issued on a regular basis, followed by a stage where those carbon credits and offsets can be traded to corporates over the counter or via broker or exchange, and followed by a retiring of yielding credits and biological sinks for carbon as long as they're protected and in a good health. On this slide, we also try to somehow depict the context where the project, the landowner, the agricultural farm, etc., they can also use reforestation as a tool after, of course, the validation and verification under certain standards to get their carbon credits issued, then monetize it via carbon market, and use those proceedings to use it as an additional, maybe not the only and main source of a financing, but additional source of a financing towards their investment projects. The carbon credit life cycle usually depends on the maturity and development of a project itself. And here we try to clearly depict that there is at least 5 stages at which potential investments can join the project owner and initiator. And the lesser the developed project, the methodology and the verification and validation works done, the higher IRR and the higher, of course, the risk of the project. And of course, we here at this slide, we try to, let's say, list and depict the main advantages, not only to, let's say, particular niche investment project, but overall for the country and the earth itself. So it's basically the international credibility, recognition, environmental pollution reduction, higher priority given to Kazakhstani products in export markets. The fourth would be ease of effect of a EU carbon tax for Kazakhstani goods and services producers. And of course, the increase of bankability of investment projects. In Kazakhstan, there is still a status quo on whether so basically, we're at the stage where we need, as a country and a regulator, decide which way shall we proceed. At the moment, we have a primary and secondary carbon market regulated mainly and fueled mainly by a national carbon plan that provides main polluters around 200 companies by carbon credits, and they do it free of charge. And of course, by providing this kind of, let's say, operation, we don't see that it will somehow influence the inflow of private and institutional investors into the carbon credits and carbon offsets markets. Well, at this stage, let me pass the floor to Mr. Maurice Frosch, the COO at Kingston Organic. Please, Maurice, the floor is yours.
Hi, everyone. Again, my name is Maurice Frosch. I'm the Chief Operating Officer at Kingston Organics. We produce a line of humic and fulvic acids that are used in carbon sequestration. They're actually used on farm fields to increase production of the land. And we can then do that to do some offsets with carbon credits. We're doing that currently in Africa, the United States, the UK, Central and South America, working with some of the largest companies in the world on their properties. We're going to start in Kazakhstan later this year. But I think it's more important to get into the carbon sequestration. And I've actually been fighting a pretty bad ear infection. And so I'd like to really turn it over to Alex Rao, who could actually speak more about the matter of carbon sequestration in the soil, which is going to be a big part of Kazakhstan meeting its 2030 obligations under the Paris Accords. Alex, you there?
Thank you, Maurice. Yes, good afternoon to everyone. My name is Alex Rao. I'm from Environmental Commodity Partners and from Climate Wedge, and it's great to be here with you this afternoon. I'm joining from San Francisco, so it's middle of the night. Apologies if I'm a little bit quiet, therefore, today. But thanks to our hosts at the AIFC for convening this seminar and this particular session around carbon credits. I'm going to share, I have a few slides. I'm going to share a screen. I hope this comes through and that you all can see. So I have a few slides here just to set the stage for what are carbon credits and what are we talking about here from an asset perspective. So really, there are two types of instruments in the carbon markets. The one we call permits to pollute, which are allowances. The most commonly understood of these is the European Union allowance and EUA for their carbon market. And these are permits that are issued by a regulator and allow a company to emit 1 ton of greenhouse gas emissions, whoever's holding the permit. The other kind of carbon credit or instrument we have in the markets really they're the rights to the environmental attributes or to the reduction in greenhouse gas emissions that come from specific projects like clean power projects, clean fuel projects, or greenhouse gas reduction activities. These we call carbon credits. And so we'll get into a little bit of the difference between these two types of markets. But if we look together across the globe, carbon markets today cover about a quarter of the world's greenhouse gas emissions. There are about 30 programs, different programs, the European system, the California system, the Chinese national program that have exchange traded commodities. And we see now roughly a market that is approaching $700 billion on an annual basis. This is last year, 2021 values. We expect this year to be approaching $1 trillion this year. We consider there are different types of carbon credit markets. There's the cap and trade credits or offsets that we'll talk about today. In certain regions, you can have clean fuel credits from producing biofuels or other forms of low carbon transportation fuels. We also have instruments like renewable energy certificates for the production of clean power. It's injected into a grid, whether at the country level in Kazakhstan or at the state level in various other regions. And we have other environmental programs, including essentially biodiversity trading, other forms of credit instruments. If we look across the globe, most of the activity historically has been centered around Europe as the major source of demand for credits in the international framework, historically under the Kyoto Protocol, and now going forward under the Paris Agreement. But we also have regional programs such as in California or in China that are very strong and starting to build a regional bid, what we would call a bid for pollution reduction. So markets, companies, regulated emitters, as well as corporates who want to reduce their emissions, but their cost of abatement is high, will look to buy credits from other programs. And we see this concept is growing across many different countries. And then, of course, under the Paris Agreement, we expect there to be a global market emerging in the coming years for emission reductions. And we think this is a very exciting opportunity, in particular for countries like Kazakhstan, who have large resources and large lands that can host afforestation projects or agricultural sector projects and so forth. The wide sort of variety of prices. The size on some of these the charts is probably a little bit hard to read in the room, but you see a wide disparity of prices. Really, that's what this chart is showing you. From very low price programs under $10 per ton. The unit of instruments in a carbon market is always a metric ton of CO2 emissions, to certain programs where we have carbon credit prices that are over $100 a ton. And so the key question is, which markets are we talking about, and what value can a project developer, a company in Kazakhstan or any of your Central Asian countries, the neighboring countries, or projects in other parts of the world, where can they access these prices? That's where all the complexity is. But if we add them all up together, we see that you see a rapid growth in the last few years of the value, the traded value of these commodities. Again, as we mentioned before, approaching $1 trillion US in terms of turnover. The vast majority of that, as you can see here in the last year, is still the European Union's regulatory market, mandatory market, which at the moment is closed for offset. It's outside of the country, but is very relevant for most countries that are exporting, because the Europeans are essentially setting up a tax on carbon emissions that would come into the borders of the European Union. And I know that's a very relevant thing, in particular for countries such as Kazakhstan. If we look across prices, again, you see here the program, which is the highest price of all these carbon markets, and there are different markets out there. One of the most important things to realize are different types of prices of carbon credits, but the European Union system is also one of the highest price markets, approaching $100 US or 90 euros per ton today. To spend just 2 minutes to talk about the European system, because it's important in particular for the carbon tax. This is a market that is mandatory for companies that are in the power generation sector, the industrial sector of Europe, and aviation, so airline emissions, and soon to be shipping. So maritime emissions are coming into the program in Europe. This is a program that has been running since 2005, so we have a lot of data, we have a lot of experience on these markets, what the price means, and you can see prices have been quite volatile, but rising secularly, in line with the ambition of the Europeans to try to decarbonize their economy. So that has to send a signal to companies that there is value to reducing emissions in the form of carbon credits and other instruments like this, and that sends the right signal. How does that signal work? Just very briefly to show you, if we're looking at Germany, the half of the market is determined by power plants, and in particular in Europe, you have large coal plants, you have natural gas plants, and of course you have the renewables and the nuclear facilities that don't emit carbon. So most of the price is determined in Europe by the relationship between these, the cost of the fuels and the value of the power. So if we look at the profit from the perspective of a power plant operator, what you see here, this is showing for Germany at this particular period of time. This red line here is what we call the dark spread, which is simply the value of the electricity to that power plant minus the cost of the coal that it took to produce that power. There's some conversion factors and so forth, but on average, it's a good way to depict the operating profit of a coal-fired power plant. And similarly, the same thing on this black line here for that same period of time is for a natural gas-fired power plant, which has the cost of gas as its main constituent. And what you see is during this chart is showing you that the profit of a coal plant is almost always, under normal circumstances, more than a natural gas plant. These are currently, it's not quite the case in Europe because of the recent geopolitics and the impacts on the energy markets, but this is generally what happens worldwide. And you see it's more profitable to run coal than it is to run natural gas. Natural gas is cleaner burning, however. So if we account for the cost of pollution and the carbon credit that those power plants need to buy to be able to generate that power and deliver it to customers, you can see now there's a different cost equation that you have to factor in, which is the cost of the carbon permit. And for coal, you need twice as many carbon permits as you do for natural gas. And of course, renewables, nuclear, large hydro power plants do not need that permit at all. And so these can change the profit equation. And this is the key feature here. So you see periods of time when the profit to a natural gas plant, which is this black line, becomes more than the profit to the coal plant. And then the market automatically switches between coal and natural gas. And that's what we call real reduction or abatement in value. And so this is the objective of many carbon pricing programs, in particular the European one, is to incentivize what we call abatement. So of course, there's many other things going on in a market like this. You have lots of other correlated drivers and markets that are driving the price of a European carbon credit. You have a large options market that is also influential. But the big question is, what is the cost of reducing pollution in those those markets, and that is what ultimately governs the value of the permit. And you can see there's different attempts in steel or in chemicals and cement. Different industries have different costs of reducing pollution in addition to power generation that we discussed. So it's that interplay between all of these economic drivers and business activities that determines the carbon price. Why is this in particular relevant in the European case? Well, the Europeans are shifting their system in the next few years towards what we call a carbon tax or a border tax on imports. So steel, cement, electricity, heavy industrial products that can be brought into the European Union through trade routes will, in the near term, it looks very certain to be faced by carbon tax at the border on these imports. And I know this is a particular interest to Kazakhstan and many of your neighboring countries. In this case, the value or the cost of the tax will be based on the price of the European Union credit, so that carbon credit in Europe. So the price of the certificate that you need to buy as an importer to get your product will be based on that price, and then how many of those certificates would be based on an assessment of the relative amount of carbon emissions from the products that are produced in Europe versus the products that are produced by the importing country. And so this is a very new game in town that is starting in the next few years. It will, there's still some uncertainties in how it will be rolled out, what sectors exactly will be covered. We see the initial sectors are here: cement, electricity, fertilizer production, iron and steel, and aluminum. It's likely that other industries will be added to this list, and therefore the need to track and follow and understand CO2 prices in Europe is becoming ever more present. Kazakhstan is perhaps uniquely positioned for having long run a carbon market and an ETS in your country, showing that leadership, and there's potential that it's these kind of programs that can help incentivize relations that are driven through this carbon tax that might actually reduce the tax obligation for countries like Kazakhstan that take on a carbon price. I will stop there, but and hand over with the remaining time to my colleague Christian, who will speak a little bit more about carbon offset projects and how they are developed and how that can impact opportunities in Kazakhstan.
Thank you very much, Alex, for your extensive and knowledgeable and informative presentation. I believe the audience would have more questions rather than answers towards the topic, but I believe that it will lead and fuel further discussion between ecological teams in highly polluting entities or amongst the agricultural and farming societies. On this stage, let me pass to Christian Bruning, the partner at Climate Wedge. Christian, the floor is yours. Thank you.
Good afternoon, everyone. My name is Christian Bruning, director and partner at Climate Wedge. We are a advisor and asset manager in the space of climate finance and carbon finance and renewable energy. Have been operating for the good part of almost 20 years in this market. Also had the pleasure of working in Kazakhstan quite a few times over the past 5 years on different engagements around clean energy and carbon markets. So I'm going to speak a little bit more about carbon offsets and how they tag on to the markets that Alex mentioned here before, and how these opportunities can be integrated into an emerging national scheme or platform for emission reductions. Can you see my screen? I hope you can. Yeah. So I guess the starting point here is that offsets are essentially the glue between the different markets. As Alex mentioned, there's different types of markets globally. Some markets that are based on a cap and trade model. Others are just credit-based markets where you can generate offsets. And now you also have, under the Paris Accords, you have a new emerging international market that essentially allows trade between countries and companies across the globe. The key point today is that none of these markets are fully integrated. So what you have today is a more complex environment of compliance markets, just explained around EU ETS, for instance. Then you have voluntary carbon markets, which essentially are based on corporate and institutional demand to offset their emissions or some portion of their emissions. And then as you have this new market emerging now for international carbon trading. Under all of these schemes, you can have different forms of project-based emission reductions or offsets. And I think it's clear that the demand for offsets will be there for a long time. If we look at the market today, only a small share of the globe's emissions are under caps, and the need for reductions is much larger. And in order to engage mitigation activities across the globe, credit-based markets or offset markets play a critical role in incentivizing project developers, investors, and other stakeholders to take part in these markets. So if we look at the offset market more from a general perspective, how is it segmented and what's driving the market? It is today a rather bespoke market that's determined by very specific characteristics of the underlying project. So you have different attributes that determine today, especially in the voluntary market, global voluntary market, determine the value of the credit for the buyer. So it is different attributes like geography, what type of a project, is it reducing or sequestering greenhouse gases? When did the project start? What type of methodology, i.e., how is it calculating the emission reductions? What standard is it using? There's a handful of different standards that guard the quality of these offsets, Vera being the largest one, gold standard being another one, and then the registry backing up the standard, as then the volumes and vintages, i.e. what year did you create these offsets. And as you can see in the picture here, the price ranges then is a sum of these characters or the factors underlying the project. So what you have then is a marketplace that's purely driven by, especially in the voluntary side, it's purely driven by buy-side preferences in terms of location, project type, vintage, etc. So you get a very broad price picture for the offset market today, ranging from anywhere from plus $20 to as low as $1 or $2. But if we look at the offset market over the next 10 to 20 years, there's a couple of points that need to be sort of addressed and looked at, especially from, I guess, Kazakhstan's point of view and us from a broader platform point of view, that where are these reductions coming from? And you could simplify the sources of reductions to 4 categories. One is where you avoid losses in nature, where you avoid future emission reductions to take place through deforestations or drying of peatlands, etc. The second one is nature-based sequestration, where you add forests, you grow seaweed or mangroves, or you use another farming or agriculture methods to mitigate and sequester carbon. These 2 categories are projected to be by far the largest and most important sources of abatement over the coming 10 years. And looking at what sectors and segments one should prioritize, clearly you should have a strong base in these two categories in order to have a pool of projects and project types that are able to scale to meaningful volumes over the coming decade. Then you have two more technology-driven categories. One is, I guess, the most traditional and most common one, which is an emission reduction, technical-based emission reduction. These can be renewable energy, waste projects, energy efficiency. So all project types that include a technical intervention and a more of a traditional technical project that in one way or another reduces emissions against a predetermined baseline or a previous technology. And then you have a fourth category, which is a new and more emerging, albeit quite small category, which is a technical removal of carbon through different technical means. It also includes bioenergy, BECCS, which is bioenergy with carbon capture. This is a rapidly growing segment of the carbon markets, but prices and abatement costs in these markets are still quite high. And based on the McKinsey analysis, this is roughly a 20 to 30% of the abatement potential over the next decade. So this gives you an indication. Of course, the balance between the two depends on the country's specific situations, but for any kind of platform looking to develop offset projects, this is a good indication of having both types of projects involved as you develop an offset market and platform for projects. So now looking at two options for Kazakhstan, starting with soil and agriculture carbon. There's a number of opportunities in the agriculture space and in the soil improvement space that can reduce emissions, starting from simple methods of covering crops to producing biochar and using the soil itself as a carbon sink and improving the ability of the soil to retain the carbon, capture and retain carbon. And this is one of the fastest growing segments of the carbon markets today. This is an area that's becoming more important, partly, of course, because it has very positive side effects and ancillary benefits to the broader agriculture and farming market, providing benefits like resilience and water retention, soil health, and improvement of nutritional factors in the soil, etc. So this is an opportunity that has a lot of prospects in Kazakhstan, as well as in other larger farming areas. The second example is around gas flaring. Gas flaring obviously been a large unaddressed problem for several decades, but also presents a highly attractive short-term opportunity to reduce emissions from flaring through utilization of flare gas and associated gas in other markets. And there's a number of technical options to utilize this. Some of these options have been generating carbon credits in the clean development mechanism. And there's a lot of potential in Kazakhstan to utilize this gas, especially outside of the sort of the traditional operating practices where you're using the gas purely for field power or enhanced oil recovery. But taking out the gas outside of the oil fields and utilizing or replacing incumbent fossil fuels or pipeline gas or creating mini grids for gas outside of the fields presents an interesting opportunity to utilize and improve the value of the associated gas. I think I'll stop here. Happy to take some questions. This has just provided a few ideas on the importance of having a diversity in the project types that an offset platform or a carbon credit market would provide to the voluntary market in particular, but also seeing the longer-term benefits of national programs in key sectors that can then link up to the Paris Agreement and the international markets that are connected with that agreement. So I'll stop here. Thank you very much.
Thank you very much, Christian. I guess you covered pretty much two most very important sectors and industry verticals in Kazakhstan and broader Central Asia, which is agriculture, agribusiness, I would say, and definitely the energy. I believe that your inputs would definitely fuel some extra discussions, maybe around experts in those verticals. And at this stage, let me pass the floor to Mr. Irakli Partsvania, the CEO of Varnik EcoBerry, the agribusiness project that ready to consider the carbon offsets and carbon credits into their capital structure. Thank you. The floor is yours, Irakli.
Good afternoon, everyone. Sorry, I will speak only English. My name is Irakli Partsvania. I am the CEO of Varnik EcoBerry. Риски, нависшие над нашим миром, такие как продовольствие.
There are many risks, for example, the energy security, and we have to diversify as much as possible agriculture. Our approach to this issue is the following. According to FAO report, in 2018, the total pool of carbon offsets in agriculture was about 16 billion tons of CO2 equivalent. And according to that, there is a need due to transition to green economy and due to new climate policy that was again presented yesterday by our EU leaders. Now we need to diversify the agriculture and transfer it to green economy principles. And we are talking that we need to use the agronomic methods to reduce GHG emissions, use the energy supply, modernize it, the energy supply of agricultural facilities. Also, recycle agricultural waste. Our company offers the following approach to implement agricultural projects, to diversify as much as possible, to transfer all elements of the project to the green economy principles. First of all, this is energy supply, the use of renewable energies, energy efficiency. We can use here the energy of land and waste recycling, waste management, plastic waste management, bio-waste management. According to our experience, we can achieve impressive results. First of all, could you please show my presentation on the screen? We would like to present our project on growing blueberries in Kazakhstan. Our project is based on 4 principles. First, this is a high profitability, environmental principles of using carbon offsets. The third pillar this is government support of Kazakhstan, support in the framework of green green economy and berries development, culture development. So our investment project is, the purpose is to establish agro-industrial full-cycle complex, and the size of it is 288 hectares, greenhouses of blueberries 15 hectares, and also the bee houses development. The project includes plantations of blueberries, 288 hectares, greenhouses of blueberries, and lines that will protect the berries from wind. The project uses green technologies. The green technologies are presented according to the green taxonomy. This is renewable energy. We are using photovoltaic panels. We use low potential energy of land and wind. Energy efficiency is the fact that we use low potential energy of land. We use green electrical vehicles. These are green tractors and drones. The total concept of agroeconomical methods of reducing GHG emissions, the use of no carbon sources of heat and energy, using super intensive methods of soil cultivation, using the seederators for fixing nitrogen to improve the properties of soil.
As you may see, financial indicators of the project are very high. The project recovery will happen in 4 years in accordance with our expectations. Maximum IRR is almost 42%. And at the same time, we can operate as Kazakhstan is based at the cross line of main logistics paths. Our marketing niche may include both countries of Europe and South Asian countries, including Central Asian region, Russia and India, as well as Emirates. The project provides for the inclusion of laboratories for cloning and microcloning of seedlings adopted to local conditions. An important method is that the part of capacity of laboratories allocated to the growing of especially intensive forest cultures as Paulownia, and that may accumulate significant amounts of carbon. On top of that, the project provides for additional center for farmers training to scale up and transition of the technologies to other farmers in the regions. Thank you very much for your kind attention, and I hope that my presentation was interesting for you. Thank you. Thank you, Victor. Thank you, Irakli. Thank you, Irakli, for the presentation of your project, and I hope that we will observe more and more projects in the near future. I mean, the project which in the structure of their financing will have an opportunity to make payments with carbon credits and carbon offsets. Sorry, I have forgotten to mention that we have proposed in our project to use the following methodology. At the stage of project or design of the project concept, the price of carbon offset or carbon credit, which is proposed by the company initiating this project, may be significant discount for us, 40%, 50% from the current price. At verification stage or pre-verification stage, the price will be increased. That will help the investors and potential investors already to dictate the conditions where they would like to verify particular credit, and that it will help the investor to avoid unnecessary costs. This is our concept that we would like to propose for the high meeting. The system of the discounts who would like to get into carbon market. Thank you very much.
Let me pass the floor to Mr. Viktor Kovalenko, the associate partner for ESG from Ernst & Young. Please, Viktor, the floor is yours. У нас проблема, кажется, со звуком.
Seems to have an issue with the sound. Good afternoon. I was just sharing my slides, and I hope that you can see them. And I hope that they're visible now, and I hope that you can hear me and see my slides. Okay, I'll switch into Russian as I have prepared my presentation in Russian. I did not know that I'll have to speak English. I would like to speak more about the things that have been mentioned by previous speakers. The things which we call voluntary carbon markets and carbon units, projects arising on these markets. As the time is pressing, I'll take efforts to reduce my presentation, and I believe that you may get the slides from the organizers, and I'll miss certain slides from my presentation. Actually, the question that we have in the market, we have international markets, and international market has not started yet. I don't believe that it exists. Something has been adopted in Glasgow, and we have international trade of units. It is still not available. We're talking about regulating market and voluntary market. It is clear from carbon units that regulated markets are the units that arise within the quota established by the regulator, and the need for emitters to buy the difference between the emissions that they actually produce and the quota which is established by the regulator. At voluntary market, we have carbon units, which in principle includes the volume of abatement of GHG, which is reached within the project on decrease of GHG emissions in accordance with proper standards, criteria, and requirements. Or it is a project on absorption of GHG gases from atmosphere, and these volumes are transferred to the number of carbon units. So we can say for regulated market, this is a bottom-up top-to-bottom approach, which has been specified in NDC of the country. So within this frame of this objective, the state establishes certain quotas, and the emitters have to operate within these quotas. And voluntary market is bottom-up approach. Mostly the demand for carbon units is caused with the fact that companies and corporations set certain commitments on reduction of its impact on climate, and in voluntary markets, the companies can get certain amounts of offsets or carbon units that they need to demonstrate their reductions, including producing carbon neutral products and get certain premiums with regard of these products. Most often, this approach, which is practiced by metal producers, green copper, green steel, green zinc, and so on. So as a climate project, that voluntary market could be produced as climate-related project and and carbon units can be produced, there are certain principles. I'll not discover the American. These principles are available on the screen. The project should be compliant with these principles. A very important principle is complementarity principle. The carbon units gained as a result of the project should be complementary to the units that would exist if this project is not implemented. If we're talking about market, will not explain, will explain where is the sense of our project idea, risks, ideas, effects, and so on. We developed a detailed design of the project with methodology allowing us to assess the volume of reduction or absorption of emissions and how we can ensure and provide the monitoring of this process, how we can prove compliance with this complementarity principle, and then we have a validation of the project. Independent experts would check this design, and then we are implementing the projects, and the third party comes and does its verification. They check what is actually achieved as a result of the project, and that we really produce a reduction of emissions or the absorption, and it is compliant with the statements. So then carbon unit is issued in accordance with international standards, and then we have a procurement of it as a tool. Previous speakers has also touched upon the standards existing at international voluntary carbon markets. We have the whole list of them. We have a survey, and if you would like, you may load it down from the website, but there are 6 main standards, including key standards too. These are verified carbon standards and gold standard that takes the lion's share of the market and which are the most popular. They are different to each other, but still a verified carbon standard does not establish a certain social or environmental additional requirements to the project. It is focused exactly on carbon effects, reduction of emissions or absorptions of emissions. Gold standard at the same time establishes the requirement with regard of SDGs that the climate-related project has to comply. This project has supposed to contribute to goal 13, but should be also aimed to achieve at least 2 sustainable development goals. Actually, it is oriented to by ecological affairs. The voluntary market is growing. On the screen, you see the information on emitted carbon units, on their redemption. The market is growing, but it is not growing as fast as regulated markets. But here I would like to add a little bit about the price, but the growth of markets plays for the prices and for market growth. But we have to know that globally we have a lot of national and sub-regional markets for carbon units, and many of them are regulated. And actually, the use of carbon units from voluntary carbon markets can be permitted at regulated markets. This is one of the key drivers of this market. This is one of the key trends at voluntary markets. It is an attempt to connect regulated markets and voluntary markets. So within regulated markets, it could be possible to offset the carbon units which are bought at voluntary markets as a compensation or as the offsets of own commitments on quotas and so on. For instance, if we take projects and units emitted in accordance with verified carbon standards and gold standards, they can be accounted at Colombia and South Africa within the framework of commitment on carbon tax at regulated markets of these countries. And also, if we have an initiative for aviation within IATA, it is an initiative called Corsair that also includes our air carriers. It is a scheme of compensation for abatement of GHG emissions in aviation, and so within the scheme, carbon units are accepted, which are certified on VCS and gold standards at voluntary carbon markets. And these are the most important areas. So at the voluntary carbon markets, we observe significant prevalence of the projects related to absorption of emissions due to forestation projects and use of land and renewables. And this is visible from the scales. They are prevailing, they are taking leading positions, but still inside the standards, we can observe variation among sectoral scope of mechanisms and the projects which are produced in accordance with the standards, but mostly it's forest, land use, and renewables. Less we observe energy efficiency, garbage processing, sustainable waste management, and so on. The things that I have mentioned, unfortunately, at voluntary markets, the prices are significantly lower than at regulated markets, and they are identified with the type of the project and their reliability. But what is important and why we're talking about it, even with these prices, voluntary carbon markets can add additional economy and economic sense to implement climate and carbon-related projects, including Kazakhstan. One thing when a company is trying to implement a forestry project so as to decrease the emissions of CO2 or to absorb CO2 or GHGs in the country. And as a result of that, the company wills to get some economic sense of this project. Now, voluntary market could give this economic sense or partial recovery on the possibility to sell these carbon units as this market. And the idea is, if we talk about Kazakhstan, then the state can think. So as within cost as ETS, we can accept carbon units issued at voluntary carbon markets. And if these units are issued in the projects in the territory of the country, so reduction of emissions will happen in Kazakhstan, and that will have those companies and organizations who are implementing these projects, and that would add more economy to the projects. Victor, sorry, we are a little bit behind the schedule.
Let me thank each and everyone who shared their precious time with us, diving into interesting topic of carbon credit and offsets, and I wish that today's information and the efforts of the speakers would definitely fuel some thoughts and maybe a conversation amongst, be it on your work, on your offices, in your committees for ESG initiatives, be it on your investment committees, and I wish each and everyone a good health and have a good day ahead. Thank you very much, and special thanks for our speakers as well. Thank you.
Thank you.
Спасибо.